All right, everybody, welcome to Talking Real Estate with Champions Real Estate Team here at Berkshire Hathaway Home Services Ambassador Real Estate Company. My name is Mark Wayner, the second team leader here at Champions Real Estate Team. We're jumping on here a couple hours early. Russ Williams is joining me with Williams Mortgage as we jump on every Wednesday and talk about what's going on the market this last week. Reason why we're jumping on a little early, got a new listing, getting pictures taken at it at noon today, 12:30, and then virtual tour pictures and all that stuff today. And it's going live tomorrow. Showing start Friday. It'll be 7070 Binney Street, which is 72nd Maple, just a block north of Maple there. So great 4-bedroom, 2,000 square feet house, and it's listed at 190. So it's a pretty good deal with regards to that, and to have an opportunity to rent out the basement. It has a kitchenette, 2 bedrooms, and a living area down there. So it could be one of those, the rental hack where you can live upstairs and rent out the basement and have your friends or your tenant pay your mortgage. So if you're looking in that market, we got that one coming up. So kind of as we know, it's kind of one in, one out on the market side here, but we'll jump right into the normal graphics that we kind of touch on and show you here. So I think we're kind of down in new listings. We have 378. Last week we had about 400. We had more, we got 420 new contracts written. So we got more contracts than we had houses coming on the market. And then we had 378 sold homes. So, kind of same song and dance. We got one in, one out. As one comes on, one goes off. Looking at the market here. So big picture, looking at the market. We have about 1,200 active listings on the multiple listing service. That does not include the no-show listings, which basically means they're on the market, but they're not ready to be fully on the market. And then Douglas-Sarpy County. So breaking that down, we have about 610 active listings. Going further down from there, we have 362 existing homes on the market, and we have about 250 new construction homes on the market. So as we've talked on multiple weeks, inventory is very low. So we are seeing a seller's market. We touched on last week, you literally have to have a game plan to know what's going on in the marketplace. And educating our clients is key to helping you get the winning offer and coaching you on what's going on. Even offers that we've written and we haven't gotten, I try to reach out to those other agents. They can't disclose terms or anything like that, but hey, what could we have done different other than, offering the moon and a crazy high purchase price? Because at some point it just doesn't make sense to go higher than what you feel comfortable with, and ultimately what the numbers make sense. So that's what we're looking at. And there's other ways and other strategies that we can talk on one-on-one of how to set your offer apart. Because if you got 3 offers that are all at 200,000, lenders are great lenders, well, what can we differentiate you? And there's some strategies that we have to set you apart from those other offers. And that's ultimately our goal, is to get a seat at the table to at least start negotiations, rather than just getting a phone call or a text message saying, hey, appreciate the offer. You got, it's a strong offer, but unfortunately they went with somebody else. So, that's a lot of song and dance that we're getting in the marketplace right now. So as we see here, the average sold price is up 14% from last year at 270. That has a lot to do with the new construction prices going up, lumber going up, labor going up, but ultimately supply and demand basically drives everything. Show another little graphic here, our trend graphics. And so this is basically our from last year going through. So down here on the bottom middle, as we look at it here, so from last year at this exact same time, we're up 18, almost 17% in contracts written, but we're down 60% in our active listings. So what that is telling me is essentially there's houses that aren't even hitting the multiple listing service that are basically getting sold. One story I have is on Sunday, we had a house that had a sign in the yard, was not active on the market, and clients loved it, from the exterior, did not get a chance to go in and look at it, wrote a contract, and we got it accepted for basically listing price before it went on the market. And we even got a chance to have a home inspection. So even though it was sight unseen, we still have an opportunity to do an inspection, make sure everything checks out. If there's some, big alarming thing, we can essentially, talk to the seller about it, or we can walk away from the house. But ultimately, that's some of the strategies that we have is, the areas that we want to be in. Ultimately, if we know houses are coming on the market, or we go knock on doors and find somebody and say, hey, even if you're thinking about selling and you're going to work with another agent, that's great. We just want an opportunity to buy the house, and we'll give you a fair price, for that house, even knowing that we are in a seller's market. So you may give a little bit more so they don't put that house on the market, but even giving them a little bit more may save you thousands of dollars when I've seen houses selling for $30,000 to $40,000 above the listing price, which now we joke is the listing price is literally no more. It's called the starting price. So when we're listing houses, it's like, hey, let's set a good starting price that we're going to get a lot of interest in it, and then let the buyers kind of determine what that selling price is. Ultimately, it will have to appraise, but right now we're seeing a lot of buyers bringing cash to the table to make up for any appraisal shortage. So, say the purchase price is $215, home only appraises for $200,000. There's a $15,000 shortfall or shortage in there, and that, if some buyers are willing to write in the contract, hey, we'll pay up to $10,000, $5,000 of that appraisal shortage. So there's purchase price of $215. They're only willing to pay $5,000 of that purchase price, of the sale price. So basically be 205 would essentially, if that appraised at 200. Now on a selling side, protecting our sellers, we want to put a floor on that. So it's like, oh, say the only appraises for 180. We don't want to sell the house for 185. When we have, so it's some of those things that, on both sides of the coin. I know we talk about buyers, talk about sellers, but how can we protect both sides of the party depending on which team that we're representing at that time, whether we're working for the sellers, working for the buyers. And that's another reason why to have a full-time agent working for you. It's one of those things that makes sure the agents that you're working with, if it's not an agent at Champions Real Estate Team or myself, that they know what they're doing in those situations and have written a bunch of contracts or gotten the contracts accepted to know how to work those to protect you and make sure that you as a seller is taken care of or you as a buyer is taken care of. Because if you don't we'll pay the difference in appraisal. And if you don't put a cap on it of where you're at, you've just now obligated your buyer to pay that $15,000, shortage, and you're legally bound to that. So you better come up with the cash or have, or you're going to potentially lose your earnest deposit because you may be in a breach of contract, which in turn, now we'd recommend that you talk to a real estate attorney to make sure you know your options. Because ultimately, as a real estate agent, we cannot interpret the law. So we recommend and highly refer you to a good real estate attorney in that case. So that's why you really want to make sure that you're working with an agent that knows exactly what they're doing. And if they don't have that, know exactly that they have the resources to go to, be it a manager, or a team leader that has that experience in there as well. So kind of sidetracked on there, but yeah, so as we're seeing the market, we're seeing a lot of those houses that maybe aren't on the market that are going on. Because we're up 17%. So we've got more contracts written than we did last year, but we have 60% less of the houses on the market. So where's the difference? So looking at that aspect of it. So jumping in, so this kind of, we talked about purchase prices, thinking about waiting till next year, waiting till the fall. We're up 12% on our average sold price from this time last year. And we're up 20% on our listing prices. So over here, it says average active price, which basically means listing price and average sold price. We're up 12% and up 20%, respectively in those two categories. So I think, like we talked, or Russ and I were talking earlier, just like, what do we want to chat about today? That you have to have a game plan. I know we talk about that. You have to have a competent, knowledgeable agent that's surrounded by resources. I have no problem calling Greg Lemon down at the Real Estate Commission if we have questions on a first name basis with him. I teach continuing education classes, and I'm happy to get it from, the boss, at the Real Estate Commission that basically keeps everyone in line. So I've called him with clients in the room. So we make sure that we're on top of everything in that regards, that you're taken care of to the best of our abilities. So let's jump on with Russ here, see what's going on in the mortgage rates. Heard they're kind of, staying pretty low where they're at, but we'll touch base with the expert in that manner and go from there.
Hey, Mark, interest rates are staying very stable. As we know, as we move into the month of May, we start to see some of the rolling numbers from last year when we had the shutdown start to fall off of some of the economic reports. And that's going to start to put some upward pressure on rates as we head into the summer months. But this is still a great time to finance a home. There's lots of money available. We're starting to see lenders loosen up a little bit at all levels, including even jumbo financing. Lots of new money is coming into play there. Still some first-time home buyer money that's out there. So those folks, to your point earlier, that can be used sometimes in that first-time home buyer money to cover shortages if the appraisal comes in low. So that's something that, to your point of needing to have a strategy, it's very important to have. And as you pointed out very clearly here, this is a white hot real estate market. In fact, Case Shiller came out earlier this week. They're considered probably the authority as far as national real estate evaluation or appreciation numbers. And year over year was at 12% among all price points, which is phenomenal. Think about it this way. If you put 5% down payment a year ago on a house, and the house appreciated by 12% this year, that's the equivalent of a 240% return on your investment. Why is that? It's because the 12% appreciation isn't on just your 5% investment. It's on the entire property value that you've leveraged. So leveraging money can be a great way to build up some unrealized net worth. It's also a great reason to invest in rental properties. Mark, I know you're an advocate of real estate investing for rental. For those folks that aren't buying a house where they live in, they are renting somewhere, and we're seeing rents climb nationwide. But we are starting to see the early signs that inflation may hit. The Fed is going to be releasing their statement this afternoon on what their strategy is moving forward. Of course, the Fed controls short-term rates, but they're a little bit like E.F. Hutton back in the days, that whatever they say, people kind of microanalyze. And they've been telegraphing for a while that they'll continue buying mortgage bonds, which will help to keep rates somewhat moderate until maybe sometime first quarter of 2022. So we'll be listening very closely this afternoon to see if they are changing their tune there. But at this point in time, Mark, we're just sitting above 50-year lows for interest rates. Your borrowing power has never been any stronger than what it is right now. And you're buying an appreciating asset. Look at it in some ways like you're buying a stock that likely is somewhere near the bottom, and you're able to leverage that relatively safely. So anything else you want to know about finance, Mark?
I don't think so. I think, I know right now a lot of buyers are putting in, paying sellers closing cost. And I know that there's some restrictions with VA and FHA and conventional and stuff like that with regards to, I don't know if you want to touch on that a little bit of, just kind of
it's a great point, Mark. And, those that are watching the video, if there are 3 offers that came in, all 3 identical in every way, other than the first offer is cash, the second offer is conventional, the third offer is some form of a government loan. Seller's going to take cash most times so they don't have to deal with a banker. That's just the way it is. And so that's why it's important that you work with the team that's going to put together a strategy to make your offer that's financed look better. Secondarily, if there's not a cash offer, and if you're not working with the team that's really good, they're going to take the conventional offer. And conventional financing, Mark, they would allow the buyer to pay some of the seller's costs. They obviously have to take that into account when underwriting to make sure the buyer has enough funds to close, but conventional financing does allow that. When you get into government financing, VA, FHA, USDA, it gets to be a little tougher. VA flat out doesn't allow it. And in fact, if any of our listeners would like a link to the guys to check into, I'd be more than happy to send those. USDA frowns upon it, and so does FHA. So basically your non-government loans would be the sweet spot if you wanted to pay some of the seller's cost.
Yeah, and that's the thing, that is a strategy that a lot of agents are using, to get some of those offers accepted. And it helps with appraisal, because if you say, like with that $200,000 example, if, all right, we'll buy it, purchase price $200,000, pay $5,000 of the seller's cost, that basically means that seller is netting $205 on that house. So in turn, it's saving you on title insurance, potentially future property insurance, because you're not buying that purchase price is not $205. So it's saving you a little bit on state doc stamps for the seller. So there's savings to the seller that they may not necessarily realize, and to you as a buyer can also save as well. But ultimately, you have to have that cash out of pocket at the time of closing to do that. So you're bringing that ahead of time. So, yes, you're doing that, but that's really what we're seeing is that even with our clients and even talking to other agents is, there's houses we looked at that are probably appraised, but they're not putting those in there, going to pay appraisal. And the agents go, well, we took the offer that said they were going to pay a shortage in appraisal. And I'm like, well, looking at the numbers, it should appraise because there's 4 or 5 other houses higher that are similar properties, but that seller wants that reassurance that they're going to get that price. And so even though our offer is probably the same, if not a little bit better, they want that assurance in that regard. So that's something that we're seeing, in that manner. So, but yeah, I know that's a question that we ask, Russ, if we have questions financing, we'll ask them, hey, can we do this? Trying to think of different ways that we can, be attractive to that seller and in the best interest of our clients in that regards. But, so there are a lot of.
Yeah, you don't have to be working with me to get help on some of these deals. So if you have questions, I'm old, I've been around a long time. So feel free to shoot those questions to me, call, text, email, whatever's most convenient. I'll get your resources to make sure that you go in informed.
Yeah. And the nice thing is, I mean, Russ has been around for a long time, but he also teaches other real estate agents that are getting the license. So he teaches the finance class at Results Coaching School of Real Estate. So he's very, very knowledgeable. And the nice thing is that when our clients are working with Russ and we write a contract on a house that Russ knows that agent, it makes it smoother because it's like, oh, I know Russ Williams at Williams Mortgage, been around a long time, knows what he's doing, going to get the job done. That makes a huge difference when your offer's laying on the table, and that agent knows, us as a real estate agent and the lender as well. So that's the same thing that I know, been around the business my entire life, licensed for 13 years. There's times when we get a lender that we don't necessarily know who they are. They may be a great lender, but if we get another identical offer that we know the lender, and that other lender hasn't reached out to us, because I know that's what Russ does for us, for our clients, is we'll call that listing agent, hey, John and Jennifer Smith, got all their numbers, got all their documents, they're ready to go. All we need is a house and appraisal and we're good to go. And just that having that reassurance from a lender, the listings I've had, I can only count probably on one hand that I've gotten like calls from a lender, and it just gives that warm, fuzzy feeling, ultimately, hopefully they don't go buy a new car or something like that and throws off the whole thing. But that was one of those things I had, my clients earlier were like, hey, does the Berkshire get a discount at Nebraska? I'm like, wait a minute, don't go buying any furniture right now. Hold off. We don't need to run up a mark card on us and skew your debt to income ratio. So, but that's just something, obviously, keeping that in mind. So don't go buy a new Harley Davidson or anything like that. But other than that, yeah, you can jump on our championsrealestateteam.com website and get all the up-to-date information, what's going on in the market, home valuations, map search. There's the market report, the market insider report here. It's a great tool for if you have a house currently. It goes on there. Gotta load. And that'll basically be like a stock ticker for your house. You can see exactly what the neighbor's house sell across the street for. It won't be in there until it actually closes, but you can kind of keep track of what's going on, create your own report. You can go by your neighborhood, area, zip code, all that kind of fun stuff. But yeah, so appreciate everyone jumping on with us today. If you have questions, comments, you can reach out to me, 402-672-7670, or give Russ a holler at 402-290-8936. I'm happy to help you in any way, shape, or form. Like I said, if this is on, you watch this video later, comment on our page, message me, instant message, Instagram, all that kind of fun stuff. And we look forward to seeing you. And as always, have questions, give me a holler. Happy to help. Take care. Bye-bye.